What is money worth? What is the supply-demand?
Ray Dalio, the billionaire investor and founder of Bridgewater Associates, is warning that the world is facing a major economic crisis in 2023. Dalio has been studying economic history for decades, believing that the current economic conditions are eerily similar to those that preceded the Great Depression. He argues that the world is facing a perfect storm of factors that could lead to a collapse, including rising debt levels, a declining dollar, a trade war, and political instability. Dalio is not the only one who is warning of a potential crisis. Other experts have also expressed concerns about the state of the global economy. If Dalio is right, the 2023 crisis could have devastating consequences for the world. It is important to be aware of the risks and take steps to prepare for the possibility of a major economic downturn. The development of debt and the printing of money, internal strife brought on by economic disparities, and the challenge to existing authority posed by increasing power are three key factors impacting the present. It is essential to know historical cycles and the five major forces that govern everything: nature, technology, internal and foreign conflict, and money and debt.
You just touched on one. The largest amount of debt offerings and monetization of debt. What is money worth? What is the supply-demand?
The dominating power is currently in decline due to contemporary events, including technological disruption, money printing, and pandemics. The grand cycle of the rise and fall of empires and reserve currencies repeats predictably every 6 stages, with phase 6 being war and collapse. The government sold a lot of debt, which led to many people buying government bonds, and when interest rates rose, the value of that debt increased, leaving the bank broke due to fractional reserve banking. This is how Silicon Valley Bank collapsed. The bank made a secure investment in government bonds, but as the bonds lost value and clients requested their money back, the bank encountered a liquidity crisis, bringing to light the problem of organizations throughout the world holding assets that they borrowed money for but are now losing value. Although the future of falling value is difficult to foresee, it may be assessed on an intermediate or longer-term basis. The government's capacity to create money for individual recipients and to sell bonds can result in currency depreciation and a substantial default risk for debt-holding organizations. When interest rates are below inflation, purchasing power is lost, and inflation can lower the value of bonds. Holding on to debt can be harmful since it could result in not being paid or being paid with printed money. By hiking interest rates and tightening monetary policy, the central bank seeks to correct the imbalance brought on by low interest rates, which causes inflation, favors borrowers but harms lenders and creditors. Too many claims and little inherent worth for financial assets create a situation akin to musical chairs. Too many claims and little inherent worth for financial assets create a situation akin to musical chairs. First, Ray Dalio predicted the financial collapse of 2008. The COVID epidemic, he said, will put significant financial pressure on the American economy for years to come. The 72-year-old billionaire investor who made Bridgewater Associates the biggest hedge fund in the world is now warning of a new economic disaster and wants you to be ready. During a live-streamed Q&A on Friday, Dalio stated, "I think we're at risk of a war with China, mainly as a result of misunderstandings." Dalio pointed out that his forecasts are just predictions and he's been incorrect before. But based on historical trends over the previous 500 years, he asserted such calamities are unavoidable. In his most recent book, Principles for Dealing with the Changing World Order, Dalio opined that American efforts to make China and its culture more American would ultimately backfire and spark a confrontation. That might escalate the trade spat between the two countries, which the Trump administration launched in 2018 and has already caused American businesses to reduce employee pay, reduce profit margins, and increase consumer prices. In only its first year, the trade war lost Americans at least 300,000 jobs, according to Moody's Analytics research. According to a Federal Reserve Bank of New York analysis from the previous year, the trade conflict cost American corporations market value $1.7 trillion. Dalio's comments about China have prompted recent controversy. After telling CNBC last week that China's human rights policies were akin to those of a strict parent, he clarified his comments in a LinkedIn post. "I was attempting to explain what a Chinese leader told me about how they think about governing," Dalio wrote. "I was not expressing my own opinion or endorsing that approach." In that post, he expressed hope that the US and China could back away from the precipice of conflict. "What I think and what Bridgewater does are of minuscule importance relative to the rapidly growing risk of US war with China," he wrote. "I hope that thoughtful attention will be paid to that issue and that mutual understandings will increase and inclinations to fight will diminish." Having adequate money for security can help you attain a balanced investing position. Then, think about regional implications, including financial stability, internal strife, and the danger of world war. Bridgewater Associates' success is attributable to their approach of concurrently searching for opportunities in uncorrelated high-yielding assets, which results in excellent portfolio diversification and the capacity to earn profits without suffering significant losses. Regardless of what happens, Dalio said on Friday he has a simple principle for approaching future events. If you worry, you don't have to worry. And if you don't worry, you have to worry. Worrying, he said, prompts you to take a close look at your own personal risks and encourages you to take action on them. One risk, for example, could be location, meaning the physical place where you live and work. Dalio's book contains a health index that rates roughly a dozen nations on 18 factors like debt burdens, military strength, and economic output. It's intended as a resource for readers to assess risks and form strategies on where to live and invest. According to Forbes, he plans to launch a website housing real-time versions of the data. Moving is often a hassle, but Dalio said it's worth considering under financially worrying circumstances. Flexibility is key, he added. Similarly, he advised measuring your financial risks in inflation-adjusted terms, instead of today's dollars. If you have cash in a savings account, for example, it's probably accruing value at a different rate than your other investments since it's being taxed by inflation. But that doesn't mean you should exclusively choose other investments over a savings account or vice versa. Amid chaotic times, Dalio said, you need your emergency savings to be funded by a safe, well-diversified portfolio. Dalio's first step to a strong portfolio is assessing your current investment strategy, if you have one, to figure out how many weeks you could financially survive if you lost your job. It always pays to find out the worst-case scenario and cover yourself from that, Dalio said. Then, make sure your money isn't all in one place. Cash is not a safe investment, Dalio told CNBC last week, as inflation hit a 31-year high in the US. Instead, he suggested on Friday, build as diverse a portfolio as possible, ranging from inflation index bonds, which Dalio recommended above regular bonds, to physical assets like gold. Your portfolio could even include digital assets like cryptocurrencies. In May, Dalio told CoinDesk that he personally owns a small amount of Bitcoin, despite years of criticizing crypto. The reason, Dalio said on Friday, it's a hedge bet made solely for the purpose of diversification. I urge those who like Bitcoin or those who like gold not to make it an all or none decision, he said. People may approach situations with an open mind by removing emotions from the picture, gaining perspective, and accepting truth via meditation. Knowing the patterns on a chessboard and the crucial bits of information in the financial markets can help you navigate the cycle and make smarter decisions. The speaker analyzes the complicated relationship between China and Taiwan, highlighting the need to defend freedom and Taiwan's interest while also taking into account China's viewpoint and Taiwan's part in the American containment policy. Instead of complicated subjects like finance and human nature, individuals need to comprehend the principles and foundations of history and cause and effect linkages to be able to navigate the world. So, what does the future hold? Will the world collapse in 2023? Only time will tell. The stakes are high. The future is uncertain, but you can weather any storm by being prepared.